Have you ever wondered who truly runs America? Politicians? Billionaires? Or perhaps faceless corporations? The truth is far more complex, and far more hidden. Behind the headlines, behind the political donations and media stories, a silent force shapes the financial destiny of the nation. They don't campaign, they don't vote, and they rarely appear in the public eye. Yet their influence stretches from Wall Street to Washington. This is the story of how hedge funds quietly came to control America. And by the end of this video, you'll understand why their power isn't just financial, it's political, cultural, and global. So stay till the end, because what you're about to hear may change the way you see money and power forever. Let's start from the beginning. Hedge funds began not as behemoths of financial dominance, but as small, experimental investment vehicles. The term, hedge fund, dates back to 1949, when a man named Alfred Winslow Jones started a modest partnership designed to protect, or hedge, against market risk. He used two strategies: buying stocks expected to rise, and shorting those likely to fall. His goal wasn't control, it was balance. But balance eventually gave way to ambition. By the 1980s, as deregulation swept across the American financial landscape, hedge funds evolved from cautious hedges into aggressive profit machines. The Reagan era ushered in a revolution in finance. Wall Street boomed, the barriers between commercial and investment banking weakened, and the wealthy sought new ways to multiply their fortunes. Hedge funds offered something irresistible: freedom. They operated outside the rigid rules that govern mutual funds and pension plans. They catered only to the rich, so regulators largely left them alone. Free from oversight, they could take risks no one else dared. Leverage, derivatives, global speculation, it was a new frontier of capitalism. By the 1990s, names like George Soros, Julian Robertson, and Ray Dalio were redefining what financial power looked like. Soros famously broke the Bank of England in 1992, forcing the British pound out of the European exchange rate mechanism and pocketing over $1 billion in profit. One man's bet reshaped the monetary policy of an entire nation. That's not just market influence. That's geopolitical leverage. America was watching, and so were its hedge fund managers. As globalization accelerated, hedge funds grew exponentially. Pension funds, universities, and even governments began to invest with them, chasing high returns. Hedge funds stopped being mere players. They became the unseen hands behind much of the financial system. By the 2000s, their collective assets had crossed the $1 trillion mark. But their real power wasn't in the money they managed. It was in the influence they wielded through it. Hedge funds thrive on information, faster, sharper, and more exclusive than anyone else's. They hire former intelligence officers, data scientists, and even ex-government officials. Some use satellite imagery to track oil shipments or retail parking lots. Others deploy complex algorithms to predict central bank decisions. This constant hunger for informational advantage turns markets into battlegrounds of secrecy. And the more data they control, the more power they hold over what prices rise or fall, what industries thrive or die. But let's be clear, money doesn't exist in a vacuum. Where capital flows, political power follows. In Washington, hedge fund managers became some of the largest donors to political campaigns. They poured millions into both parties, ensuring that regardless of who won, their interests would remain protected. Campaign finance reform may be debated endlessly, but for hedge funds, it's a simple equation: influence is an investment. A few million in donations can secure billions in favorable policy outcomes, tax loopholes, light regulation, and access to policymakers. One striking example is the carried interest loophole. Hedge fund managers often classify their earnings as capital gains rather than income, allowing them to pay a much lower tax rate than ordinary workers. Presidents from Obama to Trump have promised to close it, yet somehow, it survives. That's not an accident, it's the result of quiet, persistent lobbying by one of the most connected industries in America. When the 2008 financial crisis hit, hedge funds appeared vulnerable. Markets crashed, banks collapsed, and panic spread. Yet while millions of Americans lost their homes, many hedge funds used the chaos to expand. Some shorted mortgage-backed securities, predicting the collapse before it happened. Others bought distressed assets at pennies on the dollar. The same crisis that shattered the middle class became a generational buying opportunity for hedge funds. They emerged not weakened, but stronger. After 2008, the Federal Reserve pumped trillions into the economy through quantitative easing. That easy money inflated asset prices, stocks, bonds, real estate. And who owned those assets? Hedge funds. While the average American struggled with wage stagnation and debt, hedge funds enjoyed a golden decade of returns. And as markets recovered, they didn't just invest, they began to own the infrastructure of America itself. Private equity, venture capital, and hedge funds started merging into what some economists now call shadow banks. They bought hospitals, nursing homes, apartment complexes, even newspapers. Blackstone, one of the largest investment firms in the world, became America's biggest landlord. Citadel, another major player, evolved into a market-making empire whose systems now handle a significant share of U.S. equity trades. When you buy or sell a stock, chances are a hedge fund is somewhere in that transaction chain. This silent entanglement means hedge funds don't just influence markets, they are the markets. Their algorithms set prices, their analysts shape narratives, and their money funds the politicians who write the rules. And because their operations are largely private, the public rarely knows what's really happening behind the curtain. Nowhere is this clearer than in the relationship between hedge funds and the media. Some own stakes in news outlets. Others fund think tanks that shape economic discourse. When financial regulation is debated on television or in Congress, many of the experts weighing in are funded by or affiliated with hedge funds. Narratives about free markets, innovation, and job creation often serve to protect the very system that keeps hedge funds unaccountable. Let's take a closer look at one of the most powerful examples, Citadel, founded by Ken Griffin. Citadel isn't just a hedge fund, it's also a market maker, processing billions of trades daily. During the GameStop saga in 2021, Citadel found itself at the center of controversy. Retail traders accused Wall Street of manipulating the system to protect hedge fund positions. While the details were complex, the broader message was clear. The rules of the financial game are written by those who profit most from them. The GameStop event also revealed something deeper: how digital technology has shifted power. Today, hedge funds use artificial intelligence to monitor social media, track sentiment, and anticipate movements before the public even reacts. When you tweet about a stock, an algorithm somewhere records it, analyzes it, and turns it into trading data. The gap between retail investors and hedge funds isn't just wealth, it's information speed measured in milliseconds. But this isn't only about markets. The quiet control extends into politics and society. Hedge funds fund political action committees, university research, and charitable foundations, all of which subtly align public perception with private interest. They sponsor economics departments, influence central banking debates, and shape the education of future policymakers. Over time, the ideology of the hedge fund, profit above all else, seeps into the nation's DNA. The most concerning part is that this control is nearly invisible. Unlike corporations, hedge funds aren't required to disclose much about their holdings or strategies. They operate through limited partnerships, offshore entities, and layers of shell companies. When they buy influence, it rarely leaves a paper trail. By the time the effects reach ordinary people, rising rents, higher healthcare costs, political polarization, the connection is too complex to trace. Consider the housing market. After the 2008 crash, hedge funds bought tens of thousands of foreclosed homes. They didn't just rent them, they securitized the rents, turning housing into another tradable asset. Families competing for affordable homes now found themselves bidding against global capital. What was once a local market became an algorithmic investment vehicle. The American dream of homeownership, for many, quietly slipped into the hands of hedge funds. Or take healthcare. Investment firms now control entire hospital chains and pharmaceutical suppliers. Their goal isn't necessarily better care, it's higher margins. Costs rise, staff are cut, and patients suffer. Yet the complexity of ownership makes accountability almost impossible. The same firms lobbying for deregulation in finance are now shaping the industries most vital to American life. So, how did hedge funds become so powerful? The answer lies in a perfect storm of deregulation, technology, and global capital flows. Decades of political rhetoric about free markets created an environment where financial elites faced little oversight. As long as markets grew, politicians looked away. Technology amplified their reach. Computers could trade faster, gather more data, and dominate global exchanges. And globalization ensured that no nation, not even America, could escape the pull of international capital. By the 2020s, hedge funds were managing over $4 trillion. But that number doesn't capture their true power. Through leverage, derivatives, and ownership stakes, their influence extends over tens of trillions in assets. They fund startups, buy bonds, influence elections, and move currencies. They're the quiet empire behind modern capitalism, a network of private kings ruling from data terminals rather than thrones. And what happens when that empire falters? History gives us clues. The 1998 collapse of long-term capital management nearly took down the global financial system. It was a hedge fund run by Nobel Prize-winning economists who believed they could mathematically eliminate risk. When their models failed, the Federal Reserve organized a massive bailout to prevent catastrophe. The message was clear: hedge funds are too connected to fail. That message still echoes today. Whenever markets tremble, central banks step in to stabilize them, often benefiting those with the most exposure, hedge funds. Public losses, private profits. It's a cycle that concentrates wealth and power into ever fewer hands. And as long as the system depends on them for liquidity and stability, breaking that cycle becomes almost impossible. But not all control is intentional. Many hedge fund managers see themselves not as villains but as competitors in a global game. They argue that they provide liquidity, price discovery, and innovation. And in some ways they do. Yet when the stakes involve national economies and democratic governance, the line between innovation and domination blurs. So, where does this leave the ordinary American? In a system where the levers of economic power are held by private entities accountable only to their investors. Where policy is shaped not by public debate but by financial incentives. Where wealth translates into influence, and influence perpetuates more wealth. It's not a conspiracy, it's a structure. A quiet system of control built over decades, brick by brick, algorithm by algorithm. But history teaches that no empire, financial or otherwise, lasts forever. As public awareness grows, as technology democratizes access to information, pressure builds for reform. Calls for transparency, fair taxation, and accountability are growing louder. The challenge will be to balance innovation with oversight, to ensure that the financial tools meant to build prosperity don't end up owning the future itself. In the end, hedge funds didn't seize control of America overnight. They did it quietly, incrementally, through influence rather than invasion. Their rise reflects not just greed, but the deep logic of a system that equates success with accumulation. And as long as that logic defines our world, hedge funds will remain the invisible governors of modern capitalism. Because in the world of money, control doesn't always announce itself, it's hidden in contracts, algorithms, and campaign donations. And that's how hedge funds quietly control America. If you found this story eye-opening, don't let it end here. The forces shaping our world often work in silence, but awareness is the first step toward accountability. Share this video, discuss it, and question the systems that govern your everyday life. The more we understand how power really moves, the better equipped we are to change it. Because in the end, knowledge isn't just power, it's resistance.